Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Thursday, February the 25th, 2010. Well, an interesting candle today, and this candle is pretty much the opposite of the previous day's candle. The previous day we had a small red body with a large shadow on the end and the bottom of it. Today we have a small red body with a large shadow on the top. This large shadow on the top represents strong downside price rejection from this zone of resistance around the 81 to 81.4 region. The small red body tells us that the bears have made some small bearish net gain on the day, and it's only a small amount, so that's the important thing to take from this. The close of today is only marginally below the previous close too, so even though the bears were also keen, they really didn't trade this market down substantially from the previous close and also from where the market opened. Having said that though, this candle on the trading day is certainly not good for the bulls. The bears are probably in the ascendancy here because the market has opened at the low or towards the low and closed towards the low. And that's telling us that the bears closed in control of this market on the day, and that they've shown some commitment, and certainly the bulls have lost any commitment that they had when they traded the market up above this 81 region. Now, having said that though, there was a change of trend today, and the trend did change to the upside with a higher high and a higher low. The problem is though that the short-term dynamics are not supporting that uptrend now. We have a fairly negative outlook for this market in the short-term time frame because of the the bears being in the ascendancy, and the very strong downside price rejection from around this 81 to 81.4 region. Now, if the market does come off and we have a change of trend, then we do have fairly strong support down below here at 80.4, and that's roughly around this area where there was previous resistance in this market. Certainly if the market trades below there, there's support at 80, and then certainly down to 79.5 there should be strong support. To the upside, obviously, this 81.4 region is very strong for this market, and if that area is approached, then we do need to look at how the market interacts with that area, and if it trades outside of that area, and the bulls certainly would be looking to a solid bullish close up above the 81.4 region for the market to continue up in the second term time frame that the market is in. The market is in a second time frame uptrend. Now, the market is still trading substantially above the cloud or the Kumo, and it's interesting that even though the market does look fairly overextended, there hasn't been any substantial sell-off of this market, and that tends to suggest that we do have quite a bullish market in that longer term time frame. The market did relax around this region here where we had a congestion area build up. We had a breakout, even though it was a fairly negative breakout. Now the market is attempting to rally to this 81.4 area. The market is trading up above the Kijun-sen and Tenkan-sen, which means that the market is also bullish in terms of those indicators, and the Tenkan-sen is above the Kijun-sen, which indicates bullishness as well. The Kijun-sen is pointing up fairly sharply, and that's representing the fairly strong upside momentum that's built in this market. So there is potential for this market to continue to the upside, and probably slightly more potential for the market to continue up rather than down. But we do need to watch how the market interacts with the support and resistance areas.